A very good evening, ladies and gentlemen, and a warm welcome to the show. Thank you so much for choosing Smart 24 TV. My name is Anthony Sebale, and I am your host, and this is The Point. Now, Smart 24 TV, you can be found on DSTV and GOTV channels 372 and 302, respectively. And we give you business hours, 24 hours, 7 days a week, and we bring you the latest content on what is happening in the world of business. This show is, of course, one that also gives you a chance to learn more for those of you who are interested in different things concerning finance and economic policies. And we bring on board different stakeholders, different experts to discuss things that affect your business, things such as tax, things such as economic policies that are discussed sometimes where you're not. And this is why we are here as Smart 24 TV to drive your business. Today we have another very interesting topic with the Uganda Revenue Authority, and we are discussing the different categories or types of taxes. Did you know that income tax has different types and categories under it, and that you don't have to pay income tax as a whole? There are different types of income taxes that you could actually pay. Now, joining me on set to discuss the types and categories of taxes is none other than, once again, Mr. Masembe Michael, the education expert at the Uganda Revenue Authority. You're most welcome, Mr. Masembe, once again to The Point.
Yeah, thank you, Anthony, for hosting me once again. I'm glad to join our audience and viewers on Smart 24, The Point. And I'm glad we are talking income tax today because it's one of those that directly touch you. You see, with income tax, it's one of those direct taxes where it is your money, Anthony, but you're obliged to get a piece of it and pay it to the tax body, to government. And so I am very glad to join our viewers today as we dissect this. It comes in many forms and in many faces. At times it is income tax, but the name is different.
Yes.
But I mean, internally and by its own internal DNA, it is income tax. And regardless of the names that at times it may be baptized, it remains that income tax.
Yeah.
Yes.
Before we get into our discussion about the income tax, we have, today is the 25th.
Yes.
And we've been talking about filing returns. How many days do we have to go?
We have 5 days.
5 days to go.
September elapses on the 30th. And so we expect that whoever is an individual taxpayer out there and they have these, it's a business, you could be having rental units, it could be anything else as long as you earn income from it. The first quarter, which is the first 3 months of the financial year, they are elapsing on what, Friday, Saturday?
Yes, Saturday.
Within 5 days from now, they will be elapsing, and by that time, you're expected to have made your provisional tax return. It's an estimate of sorts where you are telling the URA, you are telling the government, going by the first 3 months that I have seen, this is how I expect my business to perform. And so it is required of you to make that declaration, to make that known to the URA, such that a fair estimate is given to you by yourself, such that you give yourself a fair estimate of the tax that you may be expected to pay at the end of the year. So let's make these returns as individual income taxpayers, but at the same time, this would be the best time again to make your corporate provisional return, your company provisional return. Why do you have to wait for 31st December? While we know that for companies it is 6 months to file your provisional return, let's not wait for that last day of December to file this, because 31st December, actually starting around 15th. Most people are packing their bags to go to the village.
That's right.
Okay? Or they are already picking the spirit and the vibe of Christmas and the holidays. And so, let's not wait for that time to come. We can file our provisional returns, be it for companies, be it for individuals, which are supposed to be due this 30th of September, right now. And that responsibility is out of the window. If there are any changes, you can always file an amendment. And life is good. Life is good, yes.
So let's get into our discussion. When we talk about income tax, first of all, if some people think income tax is just one tax you pay one-off. But at least from what we've discussed before, especially on the show,
yes,
it looks like it's broader than this. Can you tell us a little bit more about what income tax is and what it incorporates?
Yes, Anthony, and for our better appreciation of this, we need to understand that income tax only happens where there is income. In the first place, there must be income, and where there is no income, there may not have to be any tax to pay. Okay? Because it is an income tax, the first thing, the first basic and fundamental principle is there ought to be income. And who says that there is income? You, Anthony. You will tell the URA that there is income in form of a tax return. And if there is that income, and it meets or it gets into the margins that have been prescribed to be within a taxable bracket, which we tend to call a threshold. Okay? But threshold is a bit of a complex word. But do you get to a point or a starting point where we say any income above this point can pay tax or is expected to pay tax? Then you need to look at the responsibility that follow you. So first, there ought to be an income. Have you earned this income? And where have you earned the income? It could be income that has been derived from farming activity. You have your farm, you're a farmer, and your business, Anthony, is agriculture or animal rearing, or you're into poultry, or you're into anything, name it. Okay? Your business or your source of income could be hotel business. Yes. You have a restaurant, you operate a garage, you operate anything. Okay? And so as long as there is income from any of these, it could be a hospital, it could be a school, it could be a consultancy firm, you could be offering any form of business as long as there is income. You could be selling and giving services to your clients, or you could be dealing in goods, merchandise, and something like that. So in this case, you will be expected to pay income tax. But at the same time, like I started with you, there ought to be income, and this declaration comes from you. Where it isn't, where you do not make a declaration, then it means you're going to give that benefit to the Uganda Revenue Authority to generate for you an assessment. Okay? So first, there is that income, and you are the one to declare the income to the URA. If you do not declare the income to the URA, it's like you're giving the task to URA to make you an assessment. And URA will do that, guided by certain principles. URA could look at your previous declarations to it. And yes, it may look at your previous declarations. It can look at the industry average. Okay, you're into wholesale and retail, and all your co-operators in the sector, or maybe you're in hardware, are paying this amount. And so you're given an average, given that average. But regardless, even that assessment that the URA gives you, you can always appeal to it if you're not comfortable with it, if you're not satisfied with it. Alternatively, you may be comfortable with the assessment as it is, and you just pay the tax. So the income tax is on that income that you declare to the URA. One key thing that I tend to advise when I'm usually talking to people who seek advisory on tax, just do the right thing. I mean, file the accurate, declare the accurate. If you earned 1 million, show 1 million. Because the moment the URA gets to realize that instead of 1 million, you declared 500,000, the top up of the half that you didn't declare will come with penalty and interest. And so that doesn't usually end well, because what would have been 200,000 payable as tax may turn out to be 800,000.
That's right. And I think you normally find out.
Yeah, it's just a matter of time. It's just
you
a
can't
matter,
hide forever.
Yes, it's just a matter of time. The URA will come, they will find. And so our responsibilities we need to keep. The income tax on you as an individual, regardless of the source that you are getting this income from, please declare it and pay it. And if you're a company, then we will look at it in the context of a company and how it is taxed.
Well, let's look at the main sources of income.
Yes.
For our viewers now. For income tax, you said you need an income.
Yes.
That's the first basic principle. But there are different income sources. Some people are employed in formal sectors, others are in the informal sector, others are entrepreneurs, they have their personal businesses. Others are, there's been a contentious issue on the arts industry.
Yes.
Some people are saying, why aren't these people taxed? Others are saying they shouldn't be taxed. So take us through some of the examples or categories of these income taxes forms. Yes. And the main sources of income that they aim at. So
basically, it's about where you are earning the income, and then how you exist. I may exist as Michael Masembe, and I am an individual in business. Okay, so my tax will be assessed based on the profits that I make. And as an individual who is in business, we look at my tax as income tax on an individual who is in business. And this is charged on my profit. As long as my profit in the year is above 2,820,000, okay, that is 2,820,000, then my income, the profits, those are profits. So it means you look at what my general sales were, and then you knock off all the purchases I could have made, and then you knock off all the other operating expenses I could have made. And if the balance, which is the profit,
is above 2.82 million,
yes,
you're taxable.
Then you will be taxed on that profit at a rate of 10%. And if the profit is more, it will increase to 20%. If the profit is high, it will increase to 30%. If you make profits in a year of over 120 million, then there will be an extra 10%. Okay?
Wow.
So there is those scenarios.
That means 40%.
Substantially it becomes 40%. But on those amounts which are above 120 million.
Is this profit annualized or monthly profit?
Yes, it's annual. It's annual for an individual with a business.
And that's annual profit?
Yes, it is. It is. Now, we have scenarios, that is an individual who is in business. But then we also have scenarios for a person who is in business and they choose to avoid the complexities of bookkeeping. I mean, they are not as sophisticated to get into the dynamics of keeping invoices, receipts, keeping everything in records. Or if they do it, they don't want to do it in a complex way to keep payroll schedules, you understand? Asset schedules, you maintain invoice books, returns inwards, returns outwards, those complex things we used to study in accounts. The person doesn't have the time to do that. All they want to know is, for me, these are my sales for the day. And we have many of these operators in the townships and in the cities where we carry on our businesses. And this person going by the design and the appreciation of the economy and the operators in the economy, it has been guided on and legislated by Parliament that we create, and the law has actually created, what is called a presumptive regime, where we have operators like those that I've mentioned that are not comfortable with the complex accounting. They just want to tell you, and they will comfortably tell you what their sales of the day, of the month, of the year were. And that you will, based on the sales, to tell their profit. I mean, to tell their tax. So, while I started with an individual who has a business and is able to calculate their profit, there is also an alternative computation for small businesses that can compute their taxes based on their sales.
How much they're selling.
Yes. So now, but the exclusion, or where it starts, is that if your sales are below 10 million, you do not have to pay the tax.
So it means if your sales are below 10 million, you're in the presumptive regime.
Yes. You don't make any payments.
Not profit.
Yes, not
sales.
Profit. We are talking sales.
Wow.
Yeah, okay.
That's annualized. Still.
Annualized, yes. Now, we go to the next batch where someone has sales between 10 to 30 million. Okay. If you do not have any records, in that case, you will pay your 80,000 shillings.
So, before just we go on,
yes.
In other words, is URA saying that, because we've talked about bookkeeping before
yes.
as well on this show, and I remember very well how much you urged businesses to keep records, to be able to track their sales, to be able to track the receipts and so on and so forth. Now you're telling me if you're having an annual sale of 10 million, that on average is about 900,000 per month.
Okay.
It might not be a million, but maybe close to 850, between 850 to 900. Does that mean these people are exempted from bookkeeping?
Oh yeah, because it is not like we are basically saying don't keep your records. But you will also appreciate that within the business environment and many operators, not many actually, but some of the operators may not be comfortable or may not be as literate to a level that they can keep all the records the way they are desired to be kept by the taxman. So now, are you going to disenfranchise them or create a tax system that does not allow them to meet their compliance obligations? Or you will come to terms with the circumstances of the traders, some of whom may not be comfortable or may not have even the capacity and competence to keep these complicated records. And so you create them a mechanism in which they can meet their obligations. And that, in a way, lessens their requirement to keep the complex records that ideally would be expected. So it was this creation in the law that was alive, and this is not actually out of the blue. I have been in several engagements, even to date, where the business community is encouraging the taxman and government to just tell them how much tax they have to pay without complicating things. I have my shop. I just need to know this year how much do I have to pay such that my business with the taxman for the year is over. And you tell someone you pay 400,000 and they will pay it and proceed with their business. So this is what the law was actually trying to address for this presumptive category of taxpayers. Going back to the issue of records, within the same regime, there has been a coverage of both those who would be comfortable to keep records and those who wouldn't be. And you realize on the second band where I told you someone who has sales between 10 to 30 million pays 80,000. That is if they don't keep records, they pay 80,000.
Annually?
Annually.
Wow.
But if this same person is able to keep records to show their sales, they can't pay as low as 0.4% of their turnover. And of the turnover which is above 10 million in this case.
Yes, between 10 and 30 million.
Yes, meaning someone can pay to a tune of 4,000 shillings. 0.4,
Wow.
0.4. Yes, 0.4% of the turnover. So you keep records, you will pay less tax.
Yeah.
You don't keep records, you will pay less, but not as less as the one who keeps records. So if you don't keep records, there is that incentive or disincentive of slightly paying more to push you into the positive culture of keeping business records. Because we know, Anthony, when you keep records, it gives you that pulse feel on how your business is performing. You know who your customers are, you know who your suppliers are, you know your debt position, you know what items are actually selling and what items are actually locking your capital in stock. And so you will easily know what decisions to make and ultimately grow your business. The loans that you want to get, the credit, the bankers that want to give you credit would like to see records on how your business is performing. So it's not only for the benefit of the taxman, really, that you keep records. It really benefits you a lot as a business operator, and that's why we emphasize it. But now, what I'm talking about is a scenario where we have a small business operator like Anthony and Michael, who wants to pay their tax based on sales. Okay, that is presumptive. But what I need to emphasize is that this is not only restricted to individuals, even companies. We have small incorporated companies, but that haven't gotten to the level of sophistication of keeping such complicated books. And so you let them. So it is either way for presumptive tax for these individuals as it may be for corporations. Now, you asked me to break down these income taxes, and so far we have looked at individual income tax.
That's the first bracket,
Yes.
where we said if you're earning a profit of 2.8 to million and above,
Yes.
you pay 10%, 20%, 30% upwards, depending on the bracket.
On the level of
your
profitability you show.
And then now we've talked about the second category
Yes.
for the presumptive regime,
Yes.
and that is we are paying 0.4%.
Yes.
Right, for those that are compliant and they have
in between
book,
10
between 10 to 30 million
Yes.
turnover,
Yes.
and you're compliant.
Yes. Now, there are those who are between 30 million to 50 million. We have 50 million to 80 million, 80 million to 150 million. It is it's a kind of an array of bands within which you may lie, depending on your turnover level. But one thing I need to say is, this is for sales that are from 0 to 150 million.
Okay.
If your sales are between over 150 million, then you're not within this segmentation of presumptive taxpayer. But we said from 0 to 10 million, the tax is 0. 10 to 30 million, the tax is 80,000. Okay, or 0.4%, depending on whether you keep records or not. And then it goes on increasing, depending. Okay, but there is an exclusion to this, Anthony. Now, professionals like you, Anthony, you've studied everything and you're into business. You're an insurer, you're an auditor, you're a lawyer, you're a dentist, you're a medical practitioner. There is a level of training that you have received that gets the law to expect you to be able to organize proper books and report your income on profit, not sales.
As an engineer, as a lawyer.
Yes, so professionals cannot report their tax as presumptive tax.
We have to take a break on that one.
Sure,
sure. We are still discussing income tax, ladies and gentlemen. We've just given ourselves a picture of the individual tax, and then we are now looking into the bigger categories of professionals as well as the bigger businesses. Stay around. We are still breaking down these taxes, which you must know and be able to comply to if you are to be in the good records of the taxman. My name is Anthony. We'll return shortly after this quick break.